Howdy, howdy, YouTube Nation. Happy Monday. Thanks for joining, Kevin. Happy to have you here. Where is my boy, Joey Garesi, repping the Sacramento Kings hoodie today? 6 in a row. First time since 2004, 2005. Kings have won 6 in a row. And so that's cause to celebrate. Sacramento Kings are making good things happen. Before I forget, I want to talk about the magic of the 2-1 buy down, which, sneak peek for anyone watching live or who catches this before tomorrow, the 22nd of November at noon Pacific Standard Time when I'm doing this webinar. It will be recorded. I'll put the recording on YouTube. So if that date has passed, know that you can find that video on YouTube. But the magic of the 2-1 buy down, there's a link to it. I put a link in the comments as well. Is going to go over how the 2-1 buy down works. I'm going to talk about a bunch of different things. This is not only geared towards consumers, but also real estate agents. Anybody who wants to learn about this product. There's the 1-0 buy down, the 2-1 buy down, the 3-2-1 buy down. I'm going to talk about all of them. I just talked, I named it the magic of the 2-1 buy down because that's the most common one. That's the most popular. But we will get into that. We'll get into like max seller concessions on different loan types because you can do this buy down on FHA, on VA, on conventional. I'm going to show specific examples of the 2-1 buy down in action, what an actual loan estimate looks like, what the calculator that calculates how much seller concession you need. I'll talk about the fact that like lenders have programs out there now where it doesn't have to come from seller concession. You can do it without seller concession, and that basically shows up as a charge on the buy side, right? So you can pay the $10,000 extra to offset your payments in the first couple of years. Even an example of a mortgage statement after you close. I'll have that. So tomorrow, November 22nd, noon Pacific Standard Time, go to webinar. That link that's up on the screen is how you can sign up for it. Also in the comments, I've got that link as well. I think if you go on my socials, if you go like Matt the Mortgage Guy on TikTok or Matt the Mortgage Guy on Instagram, in my link tree, there's a link to that. So go sign up if you're a real estate agent, if you're a fellow loan officer and you want to learn more about it, just from what I'm seeing and hearing. I'm talking to people every single day. We're structuring these deals every single day. And so I'm not smarter, better, faster than anybody in the mortgage industry, but I'm looking at stuff every single day. So I've got answers to the most commonly asked questions because I'm getting these questions every single day, right? So really, really, really interesting stuff. And I think that like just presenting the 2-1 buy down versus a permanent buy down versus no buy down, putting it in front of consumers. Consumers are overwhelmingly choosing the 2-1 buy down as a way to structure their loan, right? Numbered, weighed, divided. You are slowly but surely becoming a super fan. You're really growing on me. Hopefully I'm growing on you. I'd love to talk about anything related to the real estate market, what you're seeing, feeling, and hearing, because there's a bunch of exciting stuff going on, right? New home builders slashing prices. I know that they've got inventory. I know that they want inventory off of the books before the end of the year. So in the next 40 days, if you're trying to buy a new build, you can get a pretty good deal. Same goes for a bunch of sellers. I'm seeing some really aggressively priced homes. You've got people who price with no, like, kind of, what's the right word? No real feel for what the current market is saying. And the current market is saying, hey, mortgage rates are up. Demand is down. There's not as many buyers. You better price it aggressively if you want to sell. Some people are like, nah, forget all that. My neighbor sold in March for 600. I'm going to list it at 625 with no chance in the world of selling. Like I could literally tell you when stuff hits the market, if it's going to sell in the first 30 or 60, 90 days based on their initial price. Because when you start off high, I know that the seller and or the listing agent, or both in some cases, have no idea what's going on in the market. and they just peg a crazy number, they're going to be decreasing the price, but not fast enough to catch the falling knife. So anyhow, that's I'm a serious thinker who hides behind the mask of a troll. I love it, man. I love it. Yeah. Everybody enjoys a little trolling now and then, right? I even enjoy it myself, a little bit of trolling. I don't ever do it with bad intentions or mean, like yourself, Number Way to Divide It. I think you come in, you know, you have an opposing point of view, but you do it in a thoughtful and constructive way versus just telling me I'm a complete idiot. Everything I'm spewing is because I want more clients and I'm a mortgage broker who just is preying on people, which those who know me knows not the truth, right? I've got more than enough business to sustain my really simple lifestyle. I'm truly in the business of empowering folks through education, giving you all the data and letting you make the decision that's best for you. I can tell you with absolute certainty that the types of buyers I'm working with, be it owner-occupied or investor clients, are in not only great financial positions where I find it nearly impossible for them to lose, but they're getting great deals. And if you think that something's going to go from 500 down to 400 in price over the next 3 years, and you can buy it today for 425, I think there's a lot of merit to buying today for 425, getting that house locked in. You can refinance later. If that opportunity presents itself, you can do a bunch of stuff later, but like there's no guarantee that things get better for you as a buyer, meaning lower price, lower interest rate. Certainly going to be hard for both of those things to happen at the same time. So, you know, you underwrite a deal before you write an offer and you say, I'm going to protect myself from potential 5 or 10% downside by buying this thing 10% lower than I might have 3 months ago or 6 months ago. And that's happening all over the place. Man, this guy's ears must be ringing. Win the House You Love, Kyle Seagraves. I was just talking about you with a friend of mine who was asking me about mortgage professionals on YouTube, what they're doing, who's doing it right. And I always point to you, brother. Do not leave this live to go check out Kyle's channel, but leave yourself a little note if you're watching this live to go check out Win the House You Love, Kyle Seagraves. This guy does it at a high level. And literally, as I was talking about you earlier, somebody clicked on it and I heard that soothing, soft, calm voice of Mortgage Reason. That is Kyle Seagraves. And it's no surprise he got 137,000 subscribers because that voice just calms people down in what is ultimately a stressful situation sometimes, and uncertain as it is. Man, that's crazy that you jumped on here, Kyle, because I was gonna send you a text just to chat with you about some of the cool stuff you're doing. I think our missions are aligned. Mortgage is a big, scary process. I'm trying to educate people to make it less scary. At the end of the day, if you have all the information, going out and purchasing a home, which you never thought possible, or going out and financing $400,000, which seems like a lot, can be a little less scary if you've got the right people giving you the right advice. Whether you use me for your mortgage or Kyle for your mortgage or whoever you use, you can go out there today, and it's a great thing about living in the world we live in today, and get great information. That great thing about the world today is also the bad thing about the world today is there's so much information, you don't know what to believe. And you might go down TikTok rabbit hole that tells you you can buy a house with a bank statement loan with nothing down, borrowing someone else's money, $1,000 a month in cash flow, do it 74 times per year, become a multi-bazillionaire, and it takes zero money out of pocket, zero credit score, all those things. That stuff's not true either. That is, who knows what that's leading to? Someone's trying to sell a course on something, right? But whatever the case, I'd love to hear from folks in the comments across the country. What are you seeing in Northern California, where I'm at, in Sacramento specific? Let me pull up Altos Research. I I love to pull this stuff up live on the screen, but for whatever reason, StreamYard has been tripping. Whenever I pull stuff up, my audio starts to go bad. So I'm one of these days, hopefully Friday after this Thanksgiving holiday, going to figure out how to fix that. Sacramento, California, on this buyer's market, seller's market, market action index, we're down to 48, which means we're moving slowly but surely into a buyer's market. The funny part about stats like this and different things like this is I think these things can lag just as much as some of the data and some of the things we see out there. For all intents and purposes, if you're a buyer in the Sacramento market, it feels like a buyer's market. It feels like you can go out there and negotiate price. It feels like you can get seller credits. When I tell you that like almost every single deal we're writing has a 2-1 buy down and it's financed by the seller, those are no small seller credits. Those are $8,000, $10,000, $12,000 seller credits that are being financed by the buyer. If you haven't seen the videos I've made on 2-1 buy down, I think there's 3 of them total now. The latest one, I went through what a 2-1 buy down looks like on the loan estimate, on the closing disclosure, and also after you close, what it looks like on a mortgage statement. I think that this is valuable stuff, especially if you're considering a buy down. I would highly recommend having somebody show you a quick screenshot. Let's try this. Let's do this at the risk of getting our screen frozen. I'm going to pull up a 2-1 buy down just to show people. Because I think all this talk about it, people do so good with examples. And I hate to rob you of a good example. Because that's really the best way to understand it, is a live example of it. Please, in the comments, if audio starts to get wonky, let me know. Because I do not like watching videos with shitty audio. I don't think any of you guys do either. And so I'm going to do my best. 425. It's funny, you make these templates and then rates get better. And you start doing buy downs at a better price. All right. Bear with me as I make this legible for all those interested. This is something I'll go over in the webinar tomorrow, but while we're here, let's check it out. All right. Share screen. There it is. Let me know how the audio goes too, because I think that it can get wonky at times. All right, zoom in. Hopefully everybody can see this. This is an example of a 2-1 buy down, year 1, year 2, year 3 through 30. Now, as you can see, 21, 21. Got to fix a few of these fields. There we go. All right. 399 in year 1, 499 in year 2, 599 in year 3. And what this does to your payment is, rather than having a 599 30-year fixed where your payment is 3531, this is all in. This is mortgage insurance, property taxes, homeowners insurance. I don't know why all over the internet you can find payments that just show principal and interest. Everybody pays tax and insurance. So to keep it out is kind of just like almost a bait and switch, in my opinion, to the consumer. But here is what this is going to look like. And how do I take that off of there? Take those banners off. There we go. Get out of the way. With, let's double check our work. 475 loan amount, 599. I've got the calculator right here. 475 loan amount, 599. This tells us what the subsidy from the seller is. 10,536.70. 10,536.70. Okay, so you need $10,536.70 from the seller. Like I said, you can now do this with lenders I'm working with and charge it to the buy side. What it would look like for you as a buyer is you'd have an extra 10,500 in quote unquote points on the front end because it hits you like a loan level price adjustment to do it that way. But let's say you get 10,536 or more, you know, get 11,000, get 12,000, apply the rest towards some of your other closing costs. You're going to essentially be saving yourself, this calculator will show it, $580 a month in year one, 298-ish a month in year two. And here's exactly how this works. You've got a $2,951 payment. Your mortgage statement is going to show the full payment of $3,531 with a $580.11 credit from your escrow account. So they're holding this money, this $10,536 from the seller, giving you $580 a month for the first year. And then whatever number I said for year two, I think it was 288, 298, 298 a month in year two. If you don't use all of it, you're going to get a refund. I haven't looked, but hopefully our hopefully the audio is still good. Correct. You can refinance. If you refinance within the first 2 years, whatever is remaining of this seller subsidy gets refunded to you as a principal pay down. So you owe $472 and you've got $4,500 left in this seller subsidy in this escrow account. Your payoff isn't $472. Your payoff is $467,500. I had to close my eyes to make sure I got the math right. Thanks for that, Jay. Audio's good. Mark says can't refinance to another 2-1 as the seller has to buy it down. Not necessarily the case anymore, Mark. You've got buyer-funded buy downs as of like last Wednesday. UWM came out with that where it's added as an LLPA. Whether or not you're able to do it on a refinance is really the question, which currently I don't think it's possible to do that. Who knows, Jay Homeboy? This is Jay Homeboy's question. Fast forward 3 years, interest rates are lower. Can I refinance to another 2-1 buy down, or is 2-1 buy down a one-time thing? I don't think Mark or I personally know, either one of us, what loan products will be available 2 years from now. But if 2 years from now you've got this loan that I have up on the screen, 399, 499, and the 24-month market goes to 599, and you're like, well, rates are at 5.25 or rates are at 4.875. You refinance to a new 30-year fixed and go into that because, you know, owing $400,000 plus at 599, it's going to be worthwhile to refinance it to 5% or lower because you'll probably break even in 12 to 15 months on that refinance, even rolling in the cost of it. But who knows what products will be available then, right? So it's hard to kind of strategize for it now. Thanks for this question, numbered Wade Divided. It's called a 2-1 buy down because in the first year, it's 2% off the rate. In the second year, it's 1% off the rate. The 1-0 buy down is you get 1 year with 1% off, and then it goes back to the quote unquote starting rate. A 3-2-1 buy down, using the same logic, 3% lower in year 1, 2% lower in year 2, 1% lower in year 3, and then years 4 through 30, it goes back to that start rate. Something important that I'll cover in that webinar tomorrow, this 5.99, this is not a quote. This is not an intent to lend. This is not anything, right? This is just an example. This is for educational purposes only. NMLS number 1088993. I can't remember what it was exactly, but it was probably a point or a point and a half to get to this 599 for this scenario. And you can do whatever you want as a buyer. You can pay 0 points and have it be 6.5. You can pay 1.25 points, have it be 5.99. You can pay 2 points and have it be 5.5. And then from that rate, your buy down starts. So this year 3 through 30 rate, I don't think it's called the start rate, but whatever the heck it's called, you can choose what you want that to be based on how much you want to pay, just like you can on a standard, rate buy down. You can take a 7%, a 6.5, a 5. It just costs different. Like at the 7, you might get 5,000 in credit. At 6.5, it might cost 0. At 6%, it might cost you 5,000. And so, you get the whole rate sheet to work with in general. And then that's the start rate for this 2-1. Where's Dan Frio? I don't know. Dan Frio's my boy too. I don't know where he's at. But yeah, Kyle's the OG. He's the original. You know what? Of all mortgage YouTubers, he might be the OG. I wonder if he's the first mortgage person on YouTube to have 100,000 subs. You know what the joke is, Kyle, for TikTok real estate or my mortgage friends? I got mortgage friends that have 250,000 followers on TikTok, and guys like me who don't do a lot. I mean, I'm on TikTok. Go check it out. It's all comedy. The joke is always that the questions they get about mortgage are, is there a T in mortgage? Whereas on YouTube, people might be a little bit more closer to actually putting in offers and more educated on mortgage is what I should say. I should be nice about it. TikTok, there's some lovely people. Nicole Jansen, thanks for joining. Thanks for the question. I guess I can remove that. Adjustable rate mortgages, you have to qualify for the payment amount now and also the payment amount once the rate resets. Yes. So don't get the 2-1 buy down confused with other adjustable rate mortgages, because the 2-1 buy down is technically not an adjustable rate. It might have a 5.99 rate and be a 30-year fixed, subsidized for the first 2 years. And like my example showed, save about 580 in year 1 and save about 298 in year 2. And then years 3 through 30, there's no subsidy, there's no savings. And really, from the disclosures and from the compliance departments of these lenders, they don't even want to attach a rate to those first 2 years. It's a 5.99 30-year fixed with a discounted payment in years 1 and 2. Well, the way we got to that discounted payment was said, what would it be if the rate was 2% lower? And what would it be if it was 1% lower in year 2? But really, it's a 30-year fixed, but discounted terms. I've got Rocket and UWM blocked. Can't stand the reps calling me like collection agents. All right. All right. Yeah, this is the fun part about all these lending programs is it's just a fancy name for a product that probably already exists, right? So Inflation Buster, 1.10 buy down funded by lender credit. Yeah, right. So it's like when we used to have different products that were like no mortgage insurance. It's like, yeah, it's lender paid mortgage insurance. You take a higher rate and have no mortgage insurance. That's been around for decades. If you're not currently using UWM, Mark, I would there's the reason why they're the #1 lender in the country. They close our loans fast. They do it like, I don't know. I'm a big fan of UWM because client experience is everything. Their clients are mortgage brokers. And as mortgage brokers, our clients are the end consumer. Client experience is everything to us, and client experience is everything to them. So they're going to make it easy, fast, and cheap for the end consumer, which is ultimately what I'm trying to do. So I would check out, there's other great lenders out there. I don't know who you're working with, Mark. If you're working with, Caliber or Home Point or Flagstar, EPM, but UWM is a great place for probably 70% of your loans. All right, what else we got? You guys are all invited. All my lender buddies are invited to that 2-1 buy down webinar tomorrow. I'm going to record it. I would say if you want to present it yourself and go to realtors, like feel free. I'll send you the slide deck. I'll send you that stuff. I think that realtors are dying to get educated, at least on a high level on how these things work, because consumers love these so much, and then consumers, when they understand the 2-1 buy down, are really excited about it, because it's a great way to get into a mortgage. If you think that rates are coming down like I do, then like it's just the best product. I like First Community Mortgage in Tennessee, and I like Home Point. Yeah, I like Home Point too. I don't know about First Community Mortgage, but man, I like to disagree with my pals from time to time. If Provident works any way like they worked in 2018 or 2019, they could take the easiest file in the world and make it a disaster. I would probably quit mortgage if I had to send loans to Provident, but I don't know. Maybe they changed. Maybe they're better. I would give them a call, Mark. I'm telling you, dude. Anybody who hasn't used, like, UWM gets significantly better every single year. When will mortgage rates go up again? I'm predicting down. But I'll tell you a scenario, Trisha, where rates go up. If we get the next inflation reading, December 13th and 14th are important dates. One of them, I think the 13th is the inflation number, and then the 14th is the Fed meeting the very next day. I would say if inflation comes in hot and higher than expected, you can expect the Fed to be forced to do if that happens and the Fed says we're doing 75 basis points and we got to continue to stay aggressive, then we're going to be in for higher interest rates. I think the opposite's going to happen. I think inflation numbers continue to improve, meaning coming down on December 13th. The November reading comes out and that's lower. And then December 14th, the Fed goes, you know what? 50 basis points is all we need to do. We're locked into doing 25 in February. And then maybe we'll take a pause. If they start to talk like that, rates are coming down. Rates aren't coming down to 5% tomorrow or next week or that middle of December when that happens, but slowly but surely, not in a straight line, rates will come down, in my opinion, low fives by Q2 of 2023. That's my call. I'm sticking to it. And when it does, to Anthony's points about what's going to happen with inquiries and applications and people, demand coming back into the market, that will come up. And to answer this question, Anthony, I did see a little uptick in applications. I did see where, rates got into the mid sixes, the buy downs were in the high fives, things got better. Like that for sure helped applications, increase demand. It's not wild, right? We're not back to like January of 22 demand levels, but they came back. And I've said this before, I really think that the 5.5% mark is really where we start to see a pretty substantial uptick in demand. For whatever reason, like that's the consumer's number, right? Like seeing a 5, seeing that 5.5 is going to have a dramatic effect on mortgage applications, otherwise known as demand, right? Will rates go above 7 soon? I don't see it. I mean, like if everyone's just looking at the 30-year fix for great credit, that number, whatever it is today, 6.6, that's not that far from 7, but it's going to take higher inflation readings and Fed statements that are towards we need to continue to tighten, we need to continue to raise the Fed funds rate more than they've already projected, right? Because everything they've projected so far is already baked in. Now the only thing to determine is, do they stay the course? Do they get more aggressive or do they get less aggressive? I think December 14th comes along, they do 50 basis points. They talk about 25 in February, and rates start to trickle down. So we gonna see. I agree with rates going down, the long way down. Hey, Carlos, what I would do is I would have your lender show you. And you want to see what is best for you. I had somebody on my team literally ask this question in our meeting today. Is it better to have a permanent buy down, meaning I just buy down and have a 30-year fixed rate at a lower rate? Is it better to use the credit to do a 2-1 buy down? Or in your case, is it better to just take $10,000 off of price? It's really your decision to make, but I'll give you a quick little scenario. Let's say that you want to use $7,500 in credits. You know what I'm going to do? I'm going to do this. I'm going to show it up here. This will really do this answer justice, and I think it'll be helpful. Share the screen. Tell me if audio starts to funk up because I don't want to show this at the cost. All right. Let's take this scenario and let's say that 6.5% is the par rate, zero cost, and a $500,000 purchase. Forget the other lines because we're just looking at this right here. You've got $10,000 in seller subsidy, this 10,536, right? And you can do with it what you want. The seller just wants to net about $490 on a $500K purchase price. Maybe that 10,536 could buy you down to 5.65. Call it 5.65. Take that credit, buy it to 5.65. Now you got a $3,400 payment, $3,425. But you say, you know what? I don't want to use it on that. We'll keep the 6.5% rate, not buy it down. I'm going to take $10,000 off of the price. I'm going to pay $490. Now your payment's $3,612. Do you owe less because you paid less and you borrowed less? Yes. But your monthly payment is $3,612 versus $3,425. So almost $200 difference. You could, if what you owe is important to you, start plugging that $200 a month extra at principal, or you could go 6.5% there, apply it to where it's 5.5% in year 2 and 4.5% in year 1. And then that $10,000 savings goes over these first 2 years. There's a bunch of different ways to do it. Ultimately, the question becomes, what's more important to you? How much you pay on a monthly basis? How much your loan balance is? Those are things that are really client specific, and I can't answer for you. I can tell you, because I talk to thousands of consumers every single year, that when given the choice between owing $475 and having a payment that's $200 cheaper per month, or you tell them option B, well, you're going to borrow less, $465.5, because we're going to lower the price by $10,000. But your payment is $3,612. Almost everybody I talk to is going to choose the lower payment, because whether they owe $475 or $465 doesn't matter as much to them as what fits into my budget. as a home buyer. And, you know, there's not a lot of people that are looking towards paying off the loan or any, they don't have that stuff in their 3 to 5 year plan. In their 3 to 5 year plan is what is a payment that I can comfortably pay and get used to every single month. Shabba Baba, please keep the questions coming. If you're a consumer, you've got a question that lots of other people have. If you're a fellow loan originator, tell me stuff that you're seeing. If you're a real estate agent, tell me stuff that your buyers are asking you. The more interactive, the better on something like this. The best lives I do is when I'm nonstop answering questions and I can't get a breath. So keep the questions coming, please. Once rates come down, how long do you think it'll take for home prices to go down? Well, home prices are softening as we speak, depending on what market you're in. Every market behaves differently. The markets that saw the biggest, fastest 30 to 40% uptick in 20 and 21 are the ones where you're getting stuff for 5, 10, 15% off of list price. And so, you know, from peak to trough, Sacramento, where I'm at, shout out Sacramento Kings, we're already seeing a 12% spread, right? Where something might have sold for $560 and you're getting it for $499 today. Because at the height of the frenzy and being able to borrow at 2.75, people could just pay $560, no problem. Now that people have to be a little bit more, you know, cost conscious because of the interest rate that's tied to it and then the payment that spits out because of that interest rate, it's a different ball game, and people are already getting substantial discounts in many markets, whether it's a resale seller, whether it's a builder who's trying to get stuff off the books. So go out there and get yourself a deal. It's really, really hard to predict what's going to happen. A lot of smart people are predicting a pretty flat real estate market in 2023. The problem is a lot of people are hoping for, and really it's just a big old bag of hopium, a big, big discount next year. And I don't know if it's coming. I can promise you that if interest rates come down to the low to mid 5%, that is going to spur more demand. And there's just not enough supply to stop home prices from leveling off, and then eventually increasing, right? Who knows if that'll happen? Who knows where interest rates will go and if we'll get that, you know, demand influx. But anybody who's saying, listen, I'm not going to buy now, I don't want to pay $500, I'm going to wait till that house costs $350, you might hold your breath until you die. That's all I'm going to say about that, because 30% price reduction in almost every single market just is not going to happen. If you're looking for that type of hopium, you might want to go check out Reventure Consulting. Okay. I'll have to Excel my options and sleep on it. Yeah, reach out to us, Carlos, if you're looking for, you know, an Excel that you can plug into. We got pretty cool Excel spreadsheets. If you're already pre-approved with the lender and you're happy with them, they're doing a great job, then by all means, you know, get something from them where you can kind of weigh the options. That's ultimately what I try to do as a mortgage advisor, is not tell people this is the only way to do it, this is the best way to do it. It's so scenario specific. It's so much a decision by the individual buyer that I'm not one to say this is how you got to do it. Just like a financial advisor would say, hey, listen, your end goal is to have 2.5 million by the time you're 65. Here's a couple different ways we can get there. You can invest in this. You can do, you know, high risk, high growth. You can do medium risk, medium growth. You could buy some life insurance. You could invest here. You could do some real estate. All kinds of different ways to do it, right? And then the individual decides how they want to do it. As a debt advisor, we're advising on the best ways to structure your debt, aka your mortgage. I'm going to give you different options. You can do a permanent buy down. You can do a 2-1 buy down. When people ask me, I get this question a lot. What would you personally do? If I was buying a house today, me and my wife have put in a couple offers, but these are investment properties, so it's a little bit different animal. If I was buying an owner-occupied house today, I would do a 2-1 buy down, 100% guaranteed. I would have as part of my game plan a refinance in the next 12 to 24 months. When the opportunity presented itself, I would be really excited about the fact that any seller subsidy I get, which is a discount from the seller today, if I don't use it all on this buy down product, I get it back as a principal pay down. That's a really cool function of this. So, all right, Mark, I just wanted to share this one more time because I think you're doing a great thing. I think that your rep is going to be happy that you unblocked him. And I'm telling you, bro, you talk to UWM, they're doing good things. I already covered this one, I think. Yeah. I mean, rates are better, to your point, right? Like 6.5 isn't fantastic compared to what we've seen over the last few years, but it's better than 7.2. And as you saw, Anthony, it's relatively easy to get to 5.99. And then from there, you can even do the 2-1 buy down where you're 3.99, 4.99. In your case, where the 2-1 buy down might not make sense, or a seller's not willing, buy it down to 5.6, buy it down to 5.8. I think no matter how you slice it, there's going to be opportunity for refinance. So maybe even spend less, settle for a 6.25, and then plan on refinancing in the future. My 2 cents. What else we got here? Did he really try? I heard him saying he was going to take a break, and really, like, I'm such an easygoing dude that I'd love to talk to some of these people that are on different sides. I don't know how this dude takes a break from YouTube when he's generating so many views. I mean, the guy's getting paid to just praise doom and gloom. Unaffordability is the problem. Most people I know that bought 5 years ago could literally not pay their mortgage. All right. Help me follow here, Zipperade. Why is it so hard to imagine that prices should be maybe 10 to 15% from 2019 in a real market, not thrown into insanity? I agree. And that's why these markets saw 30 to 40% appreciation could dial back 10 or 15%, which would put them at 10 to 15% higher than 2019. So I think that we might agree more than you think. But like, I'd love to see some of these stats you have on median income to price index, because while home prices have gone crazy, and everyone would agree 30 to 40% price appreciation in 2 years is bananas. It's unhealthy. It's not good. We need to give some of it back. We've also seen that like there's like pay increases, and I'm not talking about everybody per se, but if you look at pay increases for people that changed jobs in 20 and 21, those people saw 10 to 12% pay increases. And unfortunately, like, it is what it is. Those are the people that are buying homes, right? If you talk about minimum wage, you talk about some of these other sectors not seeing as much of a pay increase. If these people aren't necessarily the people buying houses, then it's, I don't know. I don't want to get too far into the weeds. I hear you, and I want to acknowledge that, but I don't think it's as like, I don't know. it's certain affordability certainly is an issue. I agree with that. I don't think we're at a point to where like nobody can afford a house, nobody's pay is keeping up, and like literally, like housing will just stop. Housing transactions will stop. Right? There's still going to be 4 million homes transacted next year, albeit at prices, rates, and payments that are historically a bigger percentage of that income than almost any other time. I'll agree with you on that part. Hey, Shabba Babba, this is definitely a market by market thing. Sacramento on Altos Research, they do a really good job of market action index. It was saying that Sacramento is like still in a strong seller's market, which I disagree with, right? Like this is where stats can lag and just not be like, check this out. Buyer's market is 30 below, 30 to 50 is a seller's market. And then I don't know where it turns into a strong seller's market, but like Sacramento is a great place to be a buyer, right? I got buyers snatching up deals on deals on deals. And let's check out like days on market. Average days on market is up to, 57. If you're looking at the 90-day average, you can look at median days on market. That's up to 38. I'll tell you what, like one, this is like really market specific. And it's also inside of every market, there's entry level, there's move up, and there's luxury. Kind of like 3 segments. Entry level, where there's more buyers than other levels because more people can afford it. Entry level, where there's, the vast majority of first-time home buyers are playing in that same pool. Like that's going to be more competitive, and that's going to have like, less days on market, less price deterioration, all that stuff. A lot of the luxury stuff I've seen is just sitting, getting stale. And that stuff's going to sit on the market for a long time and see big reductions. So check this out. Market action index, right? Where we're like seller's market, buyer's market. Sacramento was up here. 90-day average was 98.67. Like it was, things were on fire. Look at that, 99. That was even earlier this year. This is like a frenzy market, right? 7-day average. I don't know what all goes into this. Let's see if it tells us. Rate of sales versus inventory. Everything's flying off the shelf. Everything's going $1 billion above list price. Like that is wild. Then it slows down in winter like always. And then, this spring, Sacramento market was still bonkers. And it's lulled, fallen off a cliff, right? It's gonna continue to do that over the next 3 months, and people in Sacramento are going to be getting smoking deals. Go out and get yourself a smoking deal. We are in a buyer's market in a lot of markets. To answer your question, I still have a lot of people telling me like, hey, listen, man, in my market, like the stuff that's listed at a fair price and that shows well, it's still selling within 7 days. I'm hyper focused on the markets where I'm doing the most business. We're still doing a lot of business in Texas, in Florida, in Tennessee, in Boise, Idaho. And we're seeing a relative slowdown in a lot of those markets, a lot of deals being had, but I've got people, the realtor sent me a message from somewhere back east where he's like, listen, man, like there's lines outside of houses, which I find it hard to believe that there's people lined up with, because of what I'm seeing on my side, less applications, less demand, less people able to qualify, all that stuff. I don't have any specific insight on the New Jersey market. I'm sorry. All right. Some more doom and gloom. Petro Yuan is replacing the petrodollar. Pain is coming soon. Please elaborate. Usually these one-off comments don't get any follow-up. So I'm triple dog daring you to follow up with something that we all can understand. Kim Murray, thanks for the question. I appreciate you joining. Is the 2-1 available for non-owner occupied purchases? Unfortunately not. This would be sweet. I am telling you, Kim, investors would love this, especially new investors, because then they could get in there, have a lower payment. Probably in a lot of these investment deals where people are paying under market's rent, they can take a couple of years to take those rents back to market. It would be an amazing product. And so stay tuned. 2-1 investor. So the U.S. as the reserve currency of the world, as the superpower, we're going down in flames. Heard that one before. Thanks for dumbing it down for a public school kid like me, because I didn't understand it the first time around. But I guess it's all coming to an end, guys. So like, if the rates are 6.5 or 5.5, who cares? The whole world's coming to an end. Pain is coming soon. Petrodollar's going away. Miss Shadow Llama. Florida markets are, that's a big, it's like, how are the California markets? Well, different California markets are behaving differently. Florida in general was one of the hottest places in a lot of the towns in 20 and 21. So if you saw 40+% home price appreciation in a 2-year period, you're likely seeing it cooling off relatively fast. So that's what I'm seeing. I don't do a lot of stuff in Missouri, so I wouldn't have any insight on St. Louis, Missouri. Sorry about that. I agree with you, Jay Homeboy. Nothing wrong with public school. Proud graduate of Sacramento High School. Great public school here in Sacramento. Yeah, I think I got plenty of private school folks in town that I would happily go toe-to-toe with. Entertaining to me. That's good. That's what we're here for, right? This is not financial advice. This is just some guy on YouTube. If you're looking for that, go to CNBC or somewhere else where they make up whatever they want based on what they're trying to accomplish or who they're trying to appease, right? I'm just speaking my truth about things I'm seeing in the real estate world from one guy's perspective who deals with thousands of consumers. It's my 2 cents. We're coming up on an hour. I think I'm losing it. Fire off any other questions you have. I appreciate everyone who joined. What's a non-insulting amount I can ask to reduce the price or to buy down? 2-1 buy down on a $700K condo. Also, should I aim to close end of December or January 2023? I always took standard deduction. I don't think what year you close in is going to affect you that much. So I wouldn't worry about like, oh, what tax year am I falling in? I gotta buy it in 2022 so I can take the write-off because you're going to pay $426 in interest the end of 2022, right? I'll give you a couple minutes, a good trolley thing. 2-minute warning, numbered, weighted, divided. Come up with something really trolly. You can talk smack about my Sacramento Kings. You can talk smack about my public education. Some people like to talk about how I lick my lips. There's plenty of stuff to choose from. So you can come up with a good trolley comment while I'm working on giving Carlos some good advice. So it all depends, Carlos. And here's something too that people should understand. $700,000 listed price. If the neighbors sold for $825 6 months ago, $700,000 is already a great price. If the neighbors sold for $650, $700 is a ridiculous price, right? If they sold for $650 6 months ago when rates were lower, and now this particular seller thinks $700 is a price, it's ridiculous. So it's all relative. Another thing you have to consider is, has it been on the market for 9 days or has it been on the market for 90? If it's been on the market for 90, you ain't getting 700 sellers. If you were getting 700, it would have already sold, right? And so based on that stuff and having a good agent, Carlos, that can go to the list side and call them and say, hey there, Betty Sue, I'm calling on your condo. Yeah, it's over there on 123 Beach. Yeah, I got a buyer who likes it. You got any current offers? Any interest? The listing agent's gonna make some shit up, right? Like, oh yeah, we've got a lot of interested buyer. I think someone's writing on it tomorrow. If they say, I think someone's writing on it tomorrow, that means no offers. They've got some interest. Like, all of that is BS, right? And so a good agent can kind of pick that stuff out, and then they can start to ask the right questions along the lines of, my buyer's not really comfortable with 700. They're thinking about writing it at somewhere in the 660 range. You think that might get it done? If you guys want to hear some cool like negotiations, Javier Vidania is a realtor in Arizona. He does live calls where he's calling the list side, talking through what he thinks they'll accept. I think it's pretty cool. I'm going to actually ping him and tell him to call some Sacramento listings. But those are the things where it's hard to just say across the board, Carlos, that it's going to be like, okay, offer 650. Because if it's been on the market for 9 days, you offer 650, you're out of your mind. If it's been on the market for 90 days, maybe you come in at 665 with 10,000 in credit, right? And so that's my best advice. Really drilling down what you can get accepted, what would come across as offensive, what might actually work, or where you should start, is really the job of a great agent. A great agent it cannot be stated enough how important a great agent is in this specific market. If you don't have an agent, you can get an agent across the country by going to homeandmoney.com/Matt. For some reason, I just talk, and I never plug anything like this. This is a link where you can get connected with a great agent. homeandmoney.com/Matt. If you want to connect me and my team and get yourself pre-approved, greatmortgagebroker.com. And someone from my team will reach out to you directly and just say where you're at, how we can help. You'll actually tell them, I'm in Florida. I've got a 660 to 700. I'm looking to put 10% down on an investment property. And they'll call you and say, hey, let's talk about it. Get you pre-approved and get you on your way. So greatmortgagebroker.com for my team, homeandmoney.com/Matt for a great agent. Carl Schwab and people after Kanye West love this market. Man, these trolling comments are above my head. Do market fluctuations impact appraisals? Sure. Appraisals are impacted because, the market is changing. It's changing quickly. So you will own nothing and be happy. Was that the trolling? That's the best you could do? NWO is real. HW Bush said so. I don't even get these, man. Okay. We better end it there. I'm getting thoroughly confused. Hopefully some of this was helpful. Again, tomorrow at 12 Pacific Standard Time, the magic of the 2-1 buy down. This is the link to go sign up for it. I wonder if I still have this saved here. There it is. I'll put it in the comments. Go register for that. We're going to go over the magic of the 2-1 buy down, how it works, what it's going to look like on a loan estimate, what it's going to look like on your mortgage statement after. Yeah, feel free to bounce stuff off me, Carlos. I'll make sure we can talk to your agent. You sound like a pro. But if you've got a great agent, lean on them and have them put in the work. What I see a lot of people not doing enough of is listening to them. Agent says, listen, Carlos, like this is listed at 700, but this sold at 740. This sold at 765. Like 700 is a good price. We can offer them 690, but there's no way they're going to 660. Like they're going to get someone to pay between 690 and 710 for this because it's a great price. Like the comparables that sold higher sold at a frenzied time where people got lower interest rates. Sure. But thinking you can get it for 650 is not the case. A good agent was able to communicate that really well And a lot of buyers just be like, oh, they're full of shit, right? Where if they've done the work, if they looked at the comps, if they talked to the other side, then the information they're spitting is real. So you got to listen. All right. Hopefully this was helpful. Thanks again for watching. Happy Thanksgiving. I appreciate each and every one of you that watches this video, whether it's live, whether it's on replay. Like, comment, share, subscribe, do all the things. If nothing else, just come join like my boy Number Weighted Divided and just mix in some troll. This guy's a genuine troll, though. He's a nice troll. I like this troll. Anyhow, take care, guys.